pre-opening rates going now. They're going to start kicking in a couple of minutes from now. So as we wait by for them to come through, we also have Abneesh Roy joining into the conversation. There are a slew of FMCG earnings that have come out, and there's also ITC coming out with numbers today. So let's get straight to it. Abneesh, hi, good morning. So ITC, the stock is, almost at an all-time high. It's been one of the strongest performers this year. What is your expectation? Are you expecting a good set of numbers, and how much of it you think is already in the price?
Yeah, thanks. We remain quite positive on ITC. We expect in the next 1 year, 480, 485 kind of a up move further in terms of target price. Yeah, even in Q4, we expect a strong numbers for cigarette business, which is a key part of the overall SOTP. We expect at least 11 to 12% volume growth on a high base of 9%. So on any metric, if you see, cigarette industry for the legal players continues to gain share from the illegal. FMCG also should start seeing some margin expansion, at least quarter on quarter. And hotel business should again see a very strong quarter. Overall for ITC, we expect around 5% revenue growth and around 20% EBITDA growth. The other two smaller businesses of agri and paper, those numbers will be a bit muted because of the base effect. So we are quite positive on ITC.
Okay, all right. Just for viewers, relatively speaking, is it possible that we enter a phase of, again, relative outperformance of HUL versus ITC?
So I think HUL, if you see Q4 results, Street was a bit disappointed because there was a 2-3% miss in terms of the volume, revenue, EBITDA, etc. Not a big miss, some miss was there. If I see going ahead in HUL, the food part of the portfolio continues to see the high inflation in milk prices, especially for the HFD. But in rest of the portfolio, HUL also should start seeing margin expansion because of palm oil. Today also we have seen palm crop in Malaysia, Indonesia is ahead of expectations. So that is positive for HUL. Even in terms of the crude related input, I think HUL should gain. So yes, Q4 was a miss, but my sense is HUL should start seeing YOY margin expansion and better quality of growth in terms of sales also, because grammage addition will come back. So yes, HUL also looks good, but currently because of the strong buoyancy in terms of results from ITC, Asian Paint, GCPL, Britannia and Varun Beverages, currently the optimism is higher on those companies versus HUL. HUL is a gradual recovery story.
Okay, got that. So that's HUL versus ITC. Let's talk about Jubilant Foodworks then. Of course, the numbers were on the weaker side. There were some exceptional losses that hit the bottom line, but even on the margin front, they're struggling a bit. What do you do with a name like that?
So we continue to prefer staples over QSR. QSR slowdown, our senses will continue for 2 more quarters. It started in December in terms of demand side. Of course, in terms of the base, last few years, we have seen because of in-home consumption, it was a tailwind, but now consumer is going and experiencing and eating other food items also. Apart from that, extremely strong expansion is happening by all QSR players. So that also leads to cannibalization within the players. And third, of course, from a milk inflation perspective, it has been a key challenge, and definitely Devyani is also expanding very fast in Pizza Hut. So overall margin pressure will also continue. And if El Nino comes to India and there's a big impact, we see further inflation in milk. So currently we'll prefer the staples over QSR in the near term, medium term.
Okay, all right, staples over QSR. But from the QSR space between Devyani and Sapphire, Abneesh, what will you look at?
I think yes, between the QSRs, clearly Devyani and Sapphire are looking better because they are more diversified. Plus, definitely in the burger and KFC, etc., we are seeing faster growth and lesser impact of the milk inflation also. And pace of expansion also is definitely faster in Devyani. So yes, currently our pecking order will be like that: Devyani, Sapphire, and then Jubilant Foods will be lower.
The paint companies did pretty well this time, right? I mean, Berger Paints had an 11% volume growth. The others were not too bad either. Anything in that space that you like? Your thoughts on Berger? Any recommendations there?
Yeah, paint companies, good numbers. All companies have given. We are also waiting for Indigo. We expect good numbers for Indigo Paints also. In fact, even for Q1, Asian Paints and Berger both expect the strong momentum in volume growth to continue. And of course, margin recovery will also sustain in FY24, given the smaller base in terms of margins, and crude also has corrected. So yes, between Asian and Berger, we'll prefer Asian Paints. So clearly, if you see in terms of Berger, there are one or two smaller issues. Their new factory, which is a large factory, initial cost will be there. Also, Berger is going to ramp up the advertising spends. For Asian Paints, if you see being such a large company, advertising spends, I don't think will go up meaningfully. So we'll prefer Asian in terms of better volume growth, better margins versus a Berger in the near term, medium term. So yes, definitely in FY24, I expect Asian Paints to deliver double-digit volume growth for the full year and margin expansion also definitely for the full year.
Okay. Just a quick word. You mentioned briefly Varun Beverages and how the numbers have been solid. For those who own it, great news, but would you recommend buying it at these levels? And what kind of time horizon should one have? What are valuations looking like, and where is it compared to historical valuations and relative to what you think would be fair valuations? Go on.
Yeah, it's a good question. So that's what we are seeing in terms of the strong results. Wherever it has been, the stocks have moved up. So if you see most of the stronger results, those are near lifetime highs. So Britannia, Godrej Consumer, and all Nestle, etc., and Varun Beverages also. So yes, currently what we are seeing, because of the hard summer condition and El Nino, there is an expectation that the strong numbers will continue. Second aspect is definitely in terms of the overall inflation, WPI, CPI, that also has corrected. So in general, lower end of consumption should benefit Varun Beverages also. And Karnataka election results and generally a very strong slate of results, general elections. The expectation is that the stimulus program for the lower end will remain strong. So from a gross margin, EBITDA margin also, our sense is from packaging cost, Varun Beverages should benefit. From a valuation perspective, you are absolutely right. It is at the higher end, and long-term Reliance definitely is a concern because Campa Cola ramp up and advertisement and putting up the Visi coolers and the back end. It takes time, but I think that will be more of a longer-term concern. But yes, because of strong results and El Nino helping the summer categories, Varun Beverages should continue to do well in the near term. But yes, currently we see more upside, say, within the broader space, we see more upside in Asian Paints, ITC versus a Varun. But yeah, Varun Beverages results should remain strong in the near term.
Okay, thanks a lot, Abneesh, for joining in. Appreciate your thoughts. Well, that's the word coming in from Nuvama Institutional on the FMCG space. And we have, of course, ITC coming out later today. But let's also take a look